Welcome to the ARMR Report. This is an in-game update. It's a stock market report. It's an in-game update. I'm Brett Rosenthal, creator of the ARMR Report. I created it for you, individual investors, managing your own capital. But you respect the flow of information. You want to learn how to create that flow on your own. That's what the ARMR Report was created for. Now, generally, these in-game updates are reserved for ARMR Insiders, subscribers. And if you wish, you can subscribe to the ARMR Report right down here, ARMRreport.com. It stands for Algorithmic Risk Management Research. Okay? So I chose to share this with all of you today because I just think it's important. I want to go over why, if you follow me on Twitter, I was explaining this morning, we were putting out hedge positions to protect ourselves from an impending sell-off in the market. And then, of course, it all just cascaded lower today, and we booked a solid profit on these short hedges, and it only took an hour or so to do it. But I want to share with you why I say the time to build the ark is before the rain, okay? That's what we're looking at today. So before I jump into it, don't forget, I'm sharing the ARMR Investing Way. It's a three-stage process. We build our whiteboard, that's our fundamental research, so we know where we want to invest. We use ARMR algorithms to help us execute, know when to add risk and when to take it off. And we marry all that with a stop loss discipline. Now, I'm going to share with you my stop loss discipline, what works for me, okay, from years of study, right? But ultimately, what I'm hoping to do here is to share this process with you to help you get on the right side of probabilities and statistics over and over again, only when reward's worth the risk. And over time, I hope that helps you grow your net worth in a meaningful way while protecting capital. That's what we're trying to do here. If you enjoy this conversation, thumbs up always helps me. On YouTube, I appreciate it. Right down here, if you want to subscribe to this channel or the ARMR Report, you can click on these links I created for you. Now, so what we do every day at the ARMR Report, 8:30 we have a morning call. We share this information in the Slack room with ARMR Insiders. At 9:20 we start a 2-hour screen share, which we call our day trading room, so you can see how we're day trading and how we're preparing ourselves to put positions on that we might hold overnight. Okay? And then usually at around 3:30 I do an in-game update, so we're all ready for the last hour of trading. We know how to position our portfolio. So the reason I'm sharing this with you all today, all of YouTube, is because I think it's a very important day to just understand what's going on out there and prepare yourself to protect a portfolio. The ARMR Report is about risk management first. It's capturing upside second. Okay? So what I wanted to share, and I did this morning through Twitter, is that there's a lot going on in the market that, if you've been doing this as long as I have, is very disturbing. Now, it doesn't mean market can't go higher. It doesn't mean we're short everywhere, okay? We have a long equity portfolio, right? The ARMR portfolios, which basically represent my own personal capital, it's divided into 3 separate baskets, which I share with ARMR Insiders through our portfolio page on our website. Right? So you can see what we own, the prices we own, what the stops are that we're using. So we have our index-only portfolio, our swing strategy, and our invest strategy. And, you know, we're aggressively long there. But here are the things that are happening that you have to be aware of and think to yourself, how do I begin to prepare for the flood? Right? If you don't think about it now when you feel like you don't need to, you will be completely unprepared to make the right decisions when the flood hits. Ask me how I know this. Okay. I've been here over and over again. Now you're managing your own capital, and I really respect that. And if you're new to this process and you haven't been through the floods, then allow me to just, put you on my shoulder so you can reach higher, okay? And not live through the same things I had to go through. So what do we see? We see concept stocks going berserk. Companies with no earnings, no revenue, right? And they go berserk because there's no way to value them, right? There's no PE ratio for a company that has no earnings, no revenue, right? So it's all the greater fool theory, right? There are these concepts that might be great 5 to 10 years from now, and let's bid them to the moon. Hey man, have fun doing that all day, but just understand that you don't want to be the bag holder at the end. So start thinking about how to deal with that. Booking partial profits, raising stops, okay? We also see there are some indicators out there, and this is real, this is where it gets tricky, okay? Put call ratios, right? Call volume is through the roof, just completely through the roof. We haven't seen these levels in years. Does that mean the market's done going up? No, it could keep rolling on. I'm not telling you it's going to end. I'm not out there selling everything, but I recognize that we're at obscene levels, like really offensive. I've seen markets like this before. They could be offensive for another month. This in-game update I'm sharing with you is to get your mind prepared so you have a game plan when the end hits. What you don't want to do is be staring at the screen, not knowing what to do when the flood starts. So when we see massive call to put ratios that make no sense, how about this morning? Thanks to Zero Gamma, they cleared up for us a very interesting piece of information. VIX call buying is at lows we haven't seen since 2015. So nobody's buying calls on VIX. Nobody thinks there's a reason to protect the portfolio. Not going to be any volatility. Don't worry about it. Okay? These are precisely the times to recognize that we're in a market that can have sell-offs like we just saw this morning. So what's the ARMR investing way of protecting a portfolio, or let's call it this way, building an arc, right? Because what we don't want to do is just sell everything because we're scared, because scared money doesn't make money. And you can be scared all the time in the market, and it keeps climbing higher. So you can't start predicting the market. You can't start coming out with, oh, I'm sure this is going to happen, I'll sell everything. And here's the reason why you can't do that. The minute you do that, the market will go up for another week or two and suck you back in right at the top. You won't be able to stand it. Okay? So you can't just arbitrarily decide the market's topped. I mean, you can do whatever you want. ARMR Investing Way, we don't just all of a sudden decide the market's topped. So first of all, first thing to do is to raise stops. Whatever your stops are, trailed stops are, what you want to do is raise them up. The second thing to do is to, and not in any particular order here, but recognize that a certain amount of cash is a hedge in the portfolio. You don't have to feel like you need to be 100% invested. We've got an ARMR insider who at one point was 50% invested in the right names, making a fortune. He knows who he is. He's done a wonderful job, and yet he's got a big cash position. Nothing wrong with that. Bulls and bears make money. Pigs get slaughtered. Now's not a time to carry margin. You want to know when to carry margin? March of last year when the market bottoms. That's when you step up. When the Fed says they're starting to buy everything in sight, that's when you put your capital to work aggressively. Months later, with the market screaming to all-time ridiculous highs, that's the time to get off margin. Protect capital. Okay? Here's a couple of ideas for you. When we see statistics that call buying of VIX is at ridiculously low levels, going back all the way to 2015, it makes you aware that now's the time to buy calls on VIX. Right? I'm not telling you what to do. I don't know you. I don't know your risk tolerance. I'm not telling you to buy options. I couldn't possibly do that, guys, because I don't know you. Okay? And if you're unsophisticated in the sense of, let me use a different word. It's not unsophisticated. If you're new to this and you just haven't been doing it for a long time, you don't want to start buying call options, okay? But for those of us who've been doing this a long time, the time to buy call options on volatility is when nobody's buying it. When premiums are tiny. Same thing's true on the flip side. Buying puts on the big indexes when nobody's buying puts, so premiums are tiny, that's the time to build the ARC. These are not positions I would take with 100% of my portfolio and not have any long positions. I'm not talking about going short. I'm talking about protecting a portfolio. I'm still long everywhere, but I want to protect my portfolio. So when we see record low put buying, record low VIX call buying, that's when we realize, hey, there's an opportunity here to build the ARC. It could be just the ribs of the ARC for now. You don't need your full position size on in these hedges, but you could take your first piece. So when things start to implode, you already know where to go. The reason this is important is also emotional. When things start to implode, if you've got something that's green on your screen because you made the right choice to protect assets when nobody else thought it was necessary, that emotional support will go a long way to making a lot of correct decisions on the rest of your portfolio. Okay? I hope you understand. I hope you guys are picking up what I'm laying down here. It's not a question of let's get short. I think the market's top. That's not the point. The point is there are things happening in the market that are terribly aggressive, that has always led to equally or more aggressive selling the opposite way. You know, don't forget, guys, especially if you're new to this, you think it's so easy to make money. Hey, everything's going through the roof. The market goes down twice as fast as it goes up. That's mind-numbing, okay, when you think of how fast the market's going up right now. When it heads the other way, man, there won't be bids. And so here's another piece to the puzzle for the ARMR Investing Way of preparing for the flood, right? Building the ARC. I like to move my personal assets at this point, which is the ARMR portfolios, into big cap stocks with lots of liquidity. Okay, there might be some great ideas out there that I really want to own. I'm not going to buy them right now because they don't have liquidity. Let me tell you something. I was here March 24th of the year 2000, fully invested, making a killing the first 3 months of the year, in the year 2000, okay? Same type of hysteria going on, people paying for concept stocks with no earnings, no revenue, okay? In one day, in probably 2 or 3 hours, every stock in my portfolio was down 10%. My whole portfolio dropped 10%. And let me tell you the most disturbing thing about it, okay? There were no bids. There were just no bids. I went out there to try to sell something, air pocket, down another 4%, okay? We have to avoid that. We've worked so hard to make money in our portfolio since the bottom in March. So one way to avoid it is to, even if you want to keep putting capital to work, which I'm doing because the market looks great. We can get to the charts in a minute. But what I could do is focus on the big cap names with liquidity instead of buying concept stocks or even small cap stocks that are in the stratosphere, that are trading by appointment if you watch how they trade. And now here's another thought. I'm going to go to the charts and I'm going to show you this, but another ARMR Insider today, and this is what I love. I mean, this is an excellent benefit of the ARMR report for me. I don't know about you guys, but I started the ARMR report to help you guys out. And in the end, I've discovered that it's a symbiotic relationship because there's a lot of ARMR insiders that are phenomenal analysts. And we got more eyes on the street all working together. So I like to say we're an army of analysts backed up by a tank division of Algos, okay? And so another ARMR insider brought up this morning how good the utility stocks look. They look incredible. Let's take a peek. Whoops, that's not it. That's not it. Here we go. First, okay, before we get there, let's just look at the S&P, okay? There's nothing wrong with the S&P today, having a huge, what could be inside-out reversal day on the upside. So I'm having this conversation with you guys because now's the time to have it. This won't do you any good if I have the conversation with the market down 5%. Okay? Algorithmic risk management research. We have to manage our risk. Now, look at what's going on in utilities. This is XLU. Shout out to Rob for this heads up today. That's a phenomenal chart pattern on the utility index. Okay? And you could drill down and look at, let's say, Duke, for instance, a real leader. Gaps up right here, builds a beautiful base, holding the 50, the 200, the 100-day moving average. My favorite thing to do is to put capital to work when rewards worth the risk. What's the risk in utilities at this stage? The stop could be the low of today, or if you want to be a little more lenient, the low of the 13th. That's 88.95. The stock's trading at 90. Let's call it 93. Totally risk adjusted, perfect. Okay. If this thing runs from here, we're going to collect a 4+% yield, and we're going to write calls on it. We might do that all year. Okay? We recently added this to ARMR portfolios. All right? This used to be CenturyLink. Telephone, utilities, 9% yield. Okay? These are the type of stocks that go up when money's looking for a place to hide. Institutional money. And I'm going to leave you with this thought because it's 3 o'clock and we got to get to managing our portfolios. I'm going to leave you with this thought though. Let's look at, I want to look at the day trading setup and why I wanted, this is the real reason why I wanted to share this conversation with you today. Okay, this is the one piece of information I want to show you. Okay, here we go. Let's see if I can. Okay, I want to show you the day trading chart of the S&P. Okay, this is what disturbs me a bit on the S&P. You see this black line here, these black dots? So you're looking at a day trading, the ARMR day trading algorithm we call the price movement profiler, the PMP. It's all built around these black dots, which is the volume weighted average price. Please notice the gapping down nature of the volume weighted average price. Look at the gaps here. There's a gap here. Okay, if I open it up for you, you'll see a little bit better. Maybe not. Maybe it's harder to see that way. All right, look. You can see the spaces between these dots. That means there's aggressive selling at the VWAP. So aggressive it drives the VWAP down. That can only be institutions. When it comes to the S&P driving down the VWAP. Now look, if we close above these gaps, then all bets are off. I'm not concerned about the market. Great. We gap down. And it ends up being what we like to call a crazy Ivan here. Okay? A crazy Ivan comes from the movie The Hunt for Red October, right? Where the Russian sub drivers always stop in the middle of their run and turn around, all right, to see if there's anybody behind them. And then they complete their run. To call a crazy Ivan because you never know when they're going to turn around and take a peek at what's behind them. Same thing happens to the market. And I was sharing this at my Twitter feed, at Brett Rosenthal, if you're not watching already, at Brett Rosenthal. And I shared with you guys, we're having, it's possible we're going to have, I hate Monday morning gap ups because that's when you get the crazy Ivan, right? So we got the crazy Ivan this morning. We made a lot of money on our puts that we were buying first thing this morning. If we close above the crazy Ivan selling, then it's just that. It's just a crazy Ivan. The market taking a look, shaking out weak holders before it drives higher. But if we close at the lows today and we close below the VWAP, it tells you that there's a problem in the market, and you've got to be prepared for that. Okay? The same thing is true about the Qs. Okay? Excuse me, the Qs are still trading below those gaps. The Qs are weaker than the big index, the S&P. And we're getting a lot of earnings announcements this week. And we're getting the Fed meeting this week. So, to wrap up, is it all just preparation for the Fed meeting and earnings and a shakeout? It probably is, okay? We're not selling our whole portfolio. We've raised our stops. We have some cash in the portfolio, okay? We have some positions on that are hedges for a rainy day. And what we're going to do, as we always try to do at the ARMR Report, is read and react. Not predict, not let our ego get in the way, but just read and react. And when we see these red flags starting to show up, we start to change the structure of our portfolio, just like an institution would, right? You're managing your own portfolio. You don't have to act like a retail investor. You can act like a professional institutional manager. And what they do is they build their ark before the flood. I hope that was helpful today, guys. ARMR Insiders, I'll see you on the flip side. We'll go back to the Slack room. If you have any questions, I'll answer questions there. For the rest of you, I hope you have a good trading session, and I look forward to talking to you guys in a couple of days, probably on Wednesday. Okay? Take care, everybody.